As I indicated a few moments ago, if you have a BOE that covers you for $20,000 a month, but this particular month, because it's a reimbursement contract, this particular month you ended up taking that you only spent $15,000, then the insurance company will, in fact, send you a check for $15,000. So the obvious question is, well, what happens to the other $5,000? Okay, you don't lose it. Like there are two things that can happen here. Any unused benefit for that particular month can be transferred over into the next month. So next month, for example, just extending our example for a moment, you still had a $5,000 credit, you might say. The next month, you actually have $25,000. Because the reality is that in business, incomes, expenses are not necessarily linear. In other words, the same thing all the times. Expenses could be up one particular month and then back down again the following month. So, for example, you end up having to pay your income taxes for quarterly installments or whatever, So suddenly your needs are much higher one particular month. But you don't necessarily have that every single month. So you may have those one-offs, things of that nature there. So because we recognize the fact that in the business world, income is not a straight line, you might say, and obviously we have to make provisions for that kind of thing. So this month, your expenses were only $15,000. Your claim, we paid you the $15,000. You still have $5,000 credit. We're going to add that into the next month, $25,000. So the next month, for example, you may have $22,000 of actual expenses. We'll send your check for $22,000. You still have that $3,000 credit, which again gets puts into the following month. So the most common one here is that we basically carry over any credits, you might say, into the next month. Okay. Another one, which is quite the opposite to this one, is any unused benefit is added to the end of the benefit period. So most of the times these benefit periods are 24 months. But let's say that after 24 months, you haven't used up, let's say, $40,000. So you still have $40,000 credit. And each benefit, of course, is $20,000 a month. That means you now have 2 months that are going to be added on to your contract at the end. So unused benefits are basically added on, so it simply extends the benefit period. So you might say that you buy a block of money and you use it, fine. If you don't, we're going to carry it over into the following month, or we're going to add it on to the end of the benefit period. So all in all, it's designed basically is to cover you for the maximum possible earnings available. Now, because it is a business situation, so it's a business product. Okay, essentially, the thing is that premium will be deductible. Under the Income Tax Act, is that when you spend money to make money, basically, you can deduct the cost of that expenditure. So if you borrow money, for example, to invest, the interest component will be a deductible component, provided that you actually borrow that money for the purpose of building your business, earning an income, expanding your organization, whatever. Not personal. In other words, you didn't borrow the money so you can take a holiday. But as long as you borrow the money in an effort to actually create more business, then the interest component is deductible. Okay, so the end result is that in this case here, okay, this is for the business. You want to make sure that the business survives and everything. So your premium will be deductible. Of course, again, on the income tax, that any benefit that you get out of it will be taxable as well. So if you remember, when we're talking about taxation, the moment you deduct something at one end, it will become taxable at the other end. So here, your premium is deductible, but the benefit that you're going to get is a taxable benefit. Now, the reality is you don't really pay any tax, because if you sent me receipts, to say, for $15,000, and so therefore there was a deduction right there, and I gave you $15,000, so it's a wash, really, because at the end there really isn't any actual tax. But if you're asked, is the premium deductible? Yes, it is. Is the benefit taxable? Yes, it is. Okay, that's the answers to those questions and everything. Okay. Now, like any other kind of disability contract, there are a whole bunch of different riders that you can actually add, once again, to enhance the product, to meet your specific needs and your budget and everything. Okay? So waiver premium, very, very common. This, if you remember, waiver premium is, should you become disabled and you continue on being disabled for a minimum of 90 days, All future premiums will be deductible, waived, and the 90 days that you pay will be refunded back to you. So it's waiver of premium. There's, of course, the return of premium, very, very popular. You're all familiar with that by now, I'm sure. Future purchase option, very important, because right now, your expenditures, let's say maybe $20,000, but over a period of time, you may find that you've expanded your business and now you need more business overhead insurance because you've hired more people and so on. And once again, just like all the previous FPOs that we talked about, is that if you're uninsurable, you're not going to be able to buy anymore. So this guarantees you that no matter what happens to you, you will in fact be able to buy more BOE in the future regardless. In other words, you're ensuring your insurability. That's the idea here. Presumptive disability, remember the definition of presumptive disability, paraplegic, quadriplegic, eyesight loss, hearing, speaking, things of that nature there. It is presumed that you will never recover from these. So that is an excellent rider to add on to as well. Of course, there's the partial disability and the residual disability. So you should be familiar now with all of these particular kinds of riders. They are available on business overhead expense policy as well. And of course, we'll see you next time.